Hi there, my name is Jamie, and welcome to the first episode of Quick Market Talk with Experts. For this video series, I will be inviting various experts to have a quick chat with us on their short-term market views. We are also inviting you to have a coffee and listen in on this chat. Hopefully, by the end of it, you will be provided with more ideas on how to position yourself in the current market. The expert we have with us today is Joey Choi, a top-tier Remisier and SGX Academy trainer. Hi, Joey.
Hey, hi, Jamie.
Hi there, Joey. It's been a highly jittery week in the financial markets. There has been a broad-based sell-off, and investors appear to be in a generally risk-off mood. So, what is your personal take and sentiment on markets right now?
Thanks, Jamie. Yes, indeed. I mean, we have seen quite a bit of weakness, a bit of volatility in the markets with the banks selling off worldwide. And I think all of us know about this whole banks filling. We have the Signature Bank, we have Silicon Valley Bank, and I would say it's a bit of a risk-off approach right now, and people are all kind of like taking a sidelines. But we have kind of like traded back down to some of those pretty good support levels, and it seems like people are starting to bargain hard again. So, this has actually led the Fed, and there are talks about the Federal Reserve potentially, pausing or maybe even, not hiking that aggressively going forward because of, these failures of the banks. And if they were to hike more aggressively, it might cause more bank failures and maybe even a contagion of the banks, right? So that's what is happening right now. So I think that overall in the markets, we have seen some short-term weakness, but I think that in the mid to long term, there could potentially be some opportunities, and I doubt that it will be like what we have seen in the 2007, 2008 global financial crisis, because I think right now I can see that the governments are really stepping up, all right, and they want to put out the flame before it grows much bigger, and people are kind of stepping up and to stop the entire fallout in the global financial markets. Right. So yeah, I think that's pretty much my take. I think there could be some opportunities in the near term.
So, what are some of the opportunities you are spotting? Are there specific stocks, that you're looking at?
Yes, indeed. In fact, we are looking at some of those Singapore stocks that has been pretty defensive. In fact, I think they have not really sold off that much. So if I can just share with you two stocks, and these two stocks are none other than Sembcorp Industry and also Genting Singapore. So if you can, I can just share with you my screen and I talk through the chart very quickly. All right, so this is my screen right here. And okay, we are back at the STI. I want to talk about the STI just now, but maybe if I can, I just do a quick talk about the STI. So you can see STI, we broke down the 3,200 level right here, when this whole bank crisis started, and we are kind of like still below it. But anything near that 3,000 to 3,001, you can see right over here, this was where we have rebounded many times over the past 2 years. We could potentially see some bargain hunting. So that's the STI, which you can take a look as well. I think we do hit there. There could be some bargain hunting. All right, so let's talk about the two stocks which I want to share with you, Jamie. So these two stocks I think I mentioned would be like Sembcorp Industry, or over the past 1-2 weeks, even though the market has sold off for Sembcorp Industry, actually pushed even higher. So very, very strong uptrend, and we kind of like broke the $3.80 resistance level right here, which would now be a pretty good support level. I think the uptrend looks quite intact. As long as we stay above the 380, we could potentially push higher, maybe all the way up to like 420. That could be the near-term resistance whereby some selling can actually come back, right? So that would be like Sembcorp Industry, one of those stocks that we like, all right, and looks like a pretty good uptrend. Any dips could be an opportunity to time your entry to accumulate, to get in for any rebound, all right? So that is Sembcorp Industry. So the next stock I share with you, Jamie, would be this stock called Genting Singapore as well. So Genting Singapore will be more of a post-COVID travel play. As the world opens up, people start to travel, tourism sector starts to pick up as well. I think Genting Sing is one of those stocks that you can look at, and people can look at it. And also with China kind of opening up as well over the past few months, we have seen strength in Genting Sing. So you can see Genting Sing is kind of like trading at about the 107 level right now. In fact, I think over the past 1 week, when this whole financial sell down happened, Genting Sing kind of like traded down back to that $1 support level right here, kind of like stage a bit of rebound. So quite a good opportunity for those who have got in near $1, great, but you can see managed to stage a pretty good rebound, and we are at about 107, right? 107. So I think upside could be maybe about 110 first. If that $1.10 were to clear out and break, that's where we could potentially see a little bit more upside from 110 all the way to maybe 121, 125. So I think that is pretty much the two stocks that I'm looking at right now for the Singapore market. So yeah, I mean, of course, most people can just buy the normal stock, like a normal, the normal trading account. You can buy the shares and own it. But I think that there is one thing that I find really interesting. I think maybe you can share a bit more in terms of the warrants. I think Macquarie do have some warrants, and maybe you can share a bit more. Now that I've shared on these two stocks like Sembcorp Industries and Genting Sing, if I were to use like warrants and to take a view, how do I actually pick a warrant, and how will it perform, move alongside this respective underlying stock?
Yeah, Joey. So you're exactly right. If you were short-term bullish and the shares were, going up, you can certainly consider call warrants. So on that, I will share my screen. You consider call warrants because they move in line with the shares, and I'm just currently logged on to our website, warrants.com.sg here. Okay, and I will show you exactly how warrants move. Now look here, we have actually happened to have Sembcorp Industries as one of the top movers today, this afternoon, up about 1.8%. Actually, if you click on the underline here, what our website does is that it shows you the trending call warrant that's tracking Sembcorp Industries at the moment. In this case, it's VJAW. Now, what is a trending warrant? A trending warrant is basically a warrant with the tightest spreads as well as the highest liquidity. In this case, it's VJAW. You can click through, into the warrant terms page here to see how it moves. Historically, this warrant listed sometime in December. Okay, so here we can see it listed on the 27th of that, just based on the chart here. Okay, it listed then. So from the time it listed until now, with the shares going up 21.2%, this one has actually gone up 65.4%. So as you can tell, call warrants move in line with the underlying. Now going into how the warrant actually moves on a day-to-day basis, you can actually click on what we call the live matrix here, which is a tool that shows you how the warrant is moving live alongside the underlying price. So Sembcorp Industries right now at 406 bid will translate into a 4.3 cents bid in the warrant. And with the stock offering at 4.07, the warrant will be offered at 4.4 cents if you are looking to buy. Now, looking at your view, Joey, of Sembcorp Industries, for example, you were just mentioning that you see on a short-term basis, potentially the stock going to about 420. Am I correct?
Yep, correct.
If that's the case, you can choose 420 here, all right? And maybe scroll to the next month on the calculator to see how the warrant price would change. In this case, you see that the warrant price would go up 7% in a month's time if Sembcorp Industries were to go up 3.2% to your target level of 420. Now, how you can continue to use this tool to see how your warrant will perform is to just keep moving on the dates to a later date. So assuming, Sembcorp Industries took 2 months to move there, right, to your target level. In this case, what will happen is that the warrant bid price will only go up by 2.3%, which now is in fact lower than the underlying share price move of 3.2%. So in this case, what it means is that the value of the warrant has been eroded by time, okay, and the stock actually needs to move more in order for the warrant price to produce a higher return than the stock. And in short, this means that, the maximum kind of view that you want to have with the stock going up just 3.2% from here is a 2-month period only. Okay, anything more than that, you can see if we were to hold it for a third month, the warrant will actually start producing a loss instead. Joey, does that answer your question as to how the warrant will move?
Thanks for sharing, Jamie. At least now I think we can understand not just like the price of the underlying and the price of the warrant, but how it actually relates to one another as the time passes, as the date. So I think it's pretty interesting that you can put 2 weeks and 3 weeks, and you can know where about would be the warrant price, and then based on the underlying target price. I think that sounds really interesting.
Yeah, and you were talking about Genting. So another way to find out how a Genting call warrant will perform is to simply search up Genting here.
Yeah.
And of course, the warrants over Genting will fall off on this drop down bar. But another way of selecting the warrant, because obviously you if you're new to this warrant investment space, you wouldn't know which warrant to choose. So one good way of choosing, if it doesn't appear under the top movers table on the first page, is to go to warrant search. Okay, put in your underlying selection. Genting is here. You're bullish, so you want to choose a call. Okay, and very quickly, two warrants will appear. How to choose between the two? We have a shortcut way of doing so, whereby there is a fire logo, you can see. What a fire logo means is that it's a trending warrant. To see how it would move during the day, you can just click into the warrant. Again, you would be taken straight to the Live Matrix tab, where you get to see how the warrant will move. Right now, it's being quoted at 2 cents on the bid side and 2.1 cent on the offer side, with the underlying shares of Genting trading at 106 on the bid and 107 on the offer. So if you wanted to buy now, you can buy at 2.1 cents offer. Looking at how it's performed historically, this warrant listed in November the 3rd, I believe. Okay, and during this time when Genting shares went up 33.3% from 3rd November to now, to today, the warrant has actually gone 150%. So about 4.6 times more than the underlying shares. To see how it will perform in the future, based on your views, again, Joey, you can click on the warrant calculator. Your view in this underlying was, I think, between 110 to 120, correct?
Correct.
Okay, let's use a more conservative 110 view, okay? Obviously, if it goes up to there today, it will go up by 20%. But if it were to take maybe 3 weeks to a month, which I think is the time horizon you're looking at, Joey?
Yeah, I can just put like 2 weeks to 3 weeks, I think that's fine. Yeah.
Okay, if it were to take 3 weeks, for example, it will go up by 15%. If Genting shares were to go up by 3.8% to 110, if it took a month, you see that the warrant price will go down less. And why is that? That's because of time decay, the holding cost of the warrant, okay? Time decay basically is something that accelerates towards expiry. The longer you hold on to the warrant, the more time decay you experience, okay? But still, even then, you're going to make 10% compared to 3.8% in the underlying. Now, at which point would it be, less... the gains will be less magnified? Well, if you were to hold on for another 2 months from now, at 5%, it's still going to move more than the Genting shares itself at 3.8%. But the difference is obviously you're only paying 2.1 cents versus $1.06 right now to take a position. But if you were to hold on to it, say for 3 months and a week, 2 months and a week, sorry. So if you were to hold this for about 9 weeks, what's going to happen is that you will not see a gain in the warrant anymore, again, because of time decay. So all in all, this tool is really important for people like yourself, Joey. You're new to warrants and you were keen to see how the warrant will perform based on your view on the shares. Now, if you think that, you're happy with how the warrant's going to perform in a 2 week, 3 week period, which is in line with your view on the shares, you can obviously consider trading warrants, after finding out how they would perform over the 2 to 3 week period. But if you were having a time horizon of, like we said, more than 2 months, 3 months, then potentially you might want to look at another warrant, or you want to invest directly in the shares instead. I hope that answers your questions, Joey.
Yeah, thank you. Definitely, I think it's a great tool. It's a great tool that one can use, especially if you're taking like a short-term view to really enhance the returns, right? So I think like what you showed us now in terms of the share price increase, like it's about 1 or 2, 3%, but for the warrants, it's like more than 10, 15%. So I think that really allows somebody to do a little bit of leverage and get a better ROI. So I think that is really useful.
Yep, guys, I think that's all we have for today, because this is, after all, a quick market talk with experts. We hope you've enjoyed this episode, and we look forward to catching up with you again on the next episode, Joey.
Thank you.
Thanks. Bye now.
Bye.